automotive. Do we have a well-diversified portfolio?
No, because we are not protected from a downward shift in the automobile market.
Correct. So you diversify between industries, no? And that what means that they have different common factors. So automotive could be different from energy, could be different from I don't know, consumer staples and so on. Is this clear to everyone? Good. Then we said we don't only we diversify between stocks. So between, for example, we invest in different industries, but also we want to diversify between asset class. So we invest in stocks, we invest in bonds, and so on. Is clear? Good. So normally what happens that they have different common factors. So equities have different common factor from commodities, from bonds, and so on. So what you see here in this chart is that more or less the option written on the indicator with the volatility of the option written on the stocks. So the VIX is more or less correlated with the volatility of the options written on the treasuries. And here you see in the following slide, you see we said that the move is a Young index. Here we can see what happens here, and that in the following slide you can see what happens what happened in the last year. So you see that there is a quite high correlation between them. Again, we are not talking about stocks and bonds, but options, the volatility of options on stock and bonds. So let me ask Anna. So in your opinion, what that means?
I don't know.
Leonid?
I don't know.
Kirill?
Could you please repeat the question, because I misheard you?
Leonid, can you please repeat the question?
Right.
No, actually, I can't really repeat the question.
Nadia?
The question was, what does it mean if I hear it?
Yeah. Say it better. What does it mean?
What company is better, or what do you mean by your question?
Here we show what, Nadia, in this slide.
So sorry, we talk about the picture in the presentation, yes?
Correct.
Okay, and there is comparison of two assets, I suppose.
No.
No?
We have a comparison about what? Can you see?
Okay. Two indexes.
Yes, one is, the first one is about?
The first one is about volatility of the bond of US bond market.
On the options,
Mhm.
written on the treasuries, on the first one. It's clear?
Yeah, it's clear.
And the second?
The first index is about expectation volatility using treasury options.
And the second?
And the second one is one second. Expected volatility of future market stocks.
Mm-hmm. No, it's not correct. Correct, Nick. Can you say it, please?
Yes, so the second index is based on S&P 500 options, but
Correct.
it could be used for expectations of futures.
Both indexes are about volatilities of options. And why the volatility of option is important?
Because as the volatility of a financial instrument, it shows some expectations of market agents
Yes, about what? Which kind of expectation?
about price,
No,
basically.
volatility. What says volatility to you? What, when we say volatility is high or volatility is low, what we mean?
We can say that the risk is high or the risk is low.
Correct. Finally, good. So this is a measure of the volatility. That means a measure of the risk. It's clear? Good. Sorry, guys. We have a class for, I don't know, 40 minutes, 50 minutes, 1 hour. Try to focus for this, I don't know, this time, and then you do whatever you want afterwards. But otherwise, you waste your time and you waste my time as well. Okay, so let's go back. Nadia, what we mean, what we show with this slide, can you see it? This is slide number 6.
I can see the picture, but I can't see the text in the picture because it's
The text,
very small.
well, I can enlarge it, but also you have it on your computer because I sent to everyone. Can you see it better now?
Yeah, thank you. So there is there compare two indexes.
Yes, and then?
And which one is better? Yes, the question is.
No, what if you see this picture, what is your comment?
The average volatility increased for the time. in this picture.
Yes, and then?
And both indexes show that
If the volatility is increased, then what we say?
The risks also increase.
Okay, good. So finally we got it. Can you see these figures? For example, 112. Hello?
Yes, we can see them.
Okay, so that says exactly how much, okay, how much increased. And you see July, you see September, and for both indices. Kirill, Leonid, is okay?
What is okay? Yeah, everything's okay.
Yeah, good. So now it's clear what we wanted to say, correct?
Of course.
Good. Now we talk about this forward rate agreement, and that essentially we mentioned that we mentioned derivatives. We mentioned the fact that we can use derivatives for many reasons. This is a way to use derivatives, and essentially is about swapping currencies. So let me. Then this is the overnight index swap, and we already mentioned what is a swap, correct? Some of you mentioned that, did a presentation about swaps. Hello? Yes? So here I remind you what the definition of those swaps. And then there is this spread between FRA and OIS. And essentially, they are indicators of the credit condition of the market, because we said those derivatives from OIS are about swapping currency, and when we swap currency, let's say that I invested in I buy euro. What I do with this euro? With this money, what I do normally, I invest it. No, maybe I invested this money in a euro bond that could be issued by Italy, France, Germany, whatever. Okay, it's clear what I mean. Hello.
Yes,
So
it is.
essentially, when you invest in a currency, when you buy a currency, then also you get a return, and the return would be, if you have euro, then it would be in euro. If you buy dollars, it would be in dollars, and so on. Okay. So when you swap currencies, you get also the return related to that currency. And now I show you this. So this spread is, let me see if I can enlarge it. As you can see, as widened. This is the 14th of October, no? So there is increase in not only in option volatilities, but because before we mentioned the option volatilities on the equity market and on the bond market. But also there is an increasing risk regarding this Fraway spread. And then I show you two examples, two swaps about US dollar. And those were made by the Swiss National Bank. So the first one is 3 billion. Then the second one is 6 billion. You see, the same day. So is about 9.4 billion. And here there is the usage of by the Swiss National Bank of the Fed US dollar swap line. So what those slides tell us? Any idea?
That those swaps are not used often.
Yes, this is correct. So in normal circumstances, you shouldn't find those swaps. And then why the Swiss National Bank has entered in those swaps?
Maybe because it believes that I know economy is not stable, so high volatility is taking place.
No. Another, you can, one of the key is in the title of the slide. If you read the title of the slide, there is a keyword that can help you. Can you read the title of the slide?
Yes, yes.
Ekaterina? In your opinion, what could be the keyword?
The liquidity.
Correct. Liquidity. So when these kind of operations are done, can you answer that, Ekaterina?
When this type of
Swaps.
swaps do what?
When these kind of swaps are done, when this kind of negotiations are done, are performed.
I don't know what is problem, but I barely can hear you.
Ekaterina, can you hear me?
Yeah.
Okay, good. So when these swaps are made?
In June 2010.
Not the day, when, in which case, in which market condition?
Oh. When someone is unsure about the
Well, Nick almost
dollar.
got. Okay, the key, Ekaterina, is we said that is
Liquidity. Yeah.
so not the day, but liquidity. Okay. So what happened there? We have seen it in the previous two slides, that there were two swaps, no, to get money, no, $3 billion, $6 billion. Okay. Hello.
Yeah.
Okay. So what happened there? That the Central Bank of Switzerland requested $9 billion. Why? Think about the keyword.
To save the liquidity of a dollar, like to, how can I say that? Like to stabilize the
Leonid?
I can't really see the numbers on the previous slides because of the
But you have your slide. You have your copy of the presentation on your computer.
Okay, I will open it.
Kirill? Nikolai?
I guess that Swiss bank wants to protect its assets.
No. Nick, you almost said it correctly before. What is the key word?
Liquidity.
It's not protection. So normally, which kind of currency the central bank has?
Dollars and euros.
No, the central bank normally, which kind of money has?
National currency.
Correct, national currency. So what has done there with the swap?
What?
The swap was to do what? What was the idea of the swap? What the
Maybe the idea was that the national currency was unstable, but the dollar was more stable, so it was
not stability.
reasonable.
Don't use stability. Use the keyword.
Okay, that the national currency liquidity was volatile, something like that.
No, why you change keyword? The central bank, which kind of currency has?
National.
And then when gets entering this deal, which kind of currency gets?
During swap.
If you do the swap, you sell something and you get something else. What,
Yeah.
what they sell. Yeah.
Central bank Swiss central bank sold Swiss currency and bought dollars, right?
Okay, we got it. And then why? And get the. Now you have to use the keyword.
Because the liquidity of dollar was high, while the liquidity
the opposite.
The opposite. But
yeah, because they didn't have liquidity in dollars. They needed dollars. There was no liquidity in dollars. Nick, let's say that you are the Central Bank of Switzerland.
Okay.
Which kind of money you have? Which kind of currency?
I have Swiss currency. I don't remember
How
the
much
name.
you want, correct?
Hmm?
You can print as much as you want,
Yes.
Swiss francs, correct?
Yes. Technically.
So if you have a problem of liquidity, it's not in your currency, but is a problem of liquidity in
Dollars.
foreign,
Then.
foreign currency. In this case, we talk about dollars. No?
Yes.
It's clear to everyone. So the issue is that there is little liquidity, or there was little liquidity in dollars. And now let's try to understand. Is clear to everyone this?
So dollars had low liquidity. So central bank, Swiss central bank, made a swap to what?
To get dollars.
But it had low liquidity. Why?
Okay, I try to explain again. In your country, no, that is Switzerland, you are the head of central bank of Switzerland in this moment. In your country, you can print as much Swiss franc as you want, we said, okay?
Yes.
So you will never have a problem of liquidity in Swiss franc, because if needed, you can print it. Yes? But then can happen that you don't have, I don't know, foreign currency, enough foreign currency for any reason. Could be foreign currency because people in your country want to invest in dollars. Could be because of trades, not because you have to buy something from abroad. Okay, and not necessarily from the US. Why? Because normally, in many cases, the price of goods or services is in dollars. So even in the case you trade, I don't know, with Saudi Arabia, even the case in which you trade with Australia, with any country, often you don't use your local currency, but you use dollars.
Yes.
So what you need then is to buy dollars.
Yes.
Good. So we said for two reasons, either for trading or for investments, because people in your country want to invest in dollar assets. Okay.
Yes. Okay. I got it. Thank you.
Good. And then you need those dollars. So the problem is liquidity in dollars, because you will never have problems in your local currency, because again, we said that you can print as much as you want. Okay. Is this clear to everyone? Good. Now let's move forward. Let's try to explain what is behind that. So you see, this is the FX with three currencies. What we can observe here?
We can say that the currency of US dollar gets stronger, but I can't really see. Okay, and the pace of getting stronger compared to Japanese yen is much higher than comparing to Swiss franc, which means that Swiss franc is the most strong currency among these three, like euro, Japanese yen, and Swiss franc.
Good. So this is what we can observe. Now, let's see this one. Can you continue your comments?
Yes, of course. We can observe on this graph that Russian ruble keeps getting stronger, despite the fact that Great Britain pound is getting weaker compared to US dollar.
So remove this point because there are two different things. So what you said is good, but just remove from your sentence this point. Okay. So for the GP pounds, you have the same trend that you can see for the other currencies. Correct? Clear? Hello? Leonid?
Yes.
Okay. Instead, the rubles is different. Okay. And now let's guess why. Who knows why?
So why now we can buy less rubles for $1, right?
Okay, we have seen two things. First of all Western currencies are getting weaker, correct? And the
Yes.
second thing, the ruble instead is getting stronger. So we need to explain the first thing and the second thing.
Well, the governments or the people are more interested in ruble now. They are more likely to invest in ruble than to other currencies because of the great currency.
Who has a different idea?
Excuse me?
Yeah, I understand what you said, and now I'm asking your colleagues if they have a different opinion.
Okay.
Maybe the rubles get stronger because of the situation in our country. We close our borders and doesn't have any contact with US and Europe countries.
Well, at the end, there are two things, Nadia. We said when you want foreign currency, when you need to trade with that in that currency, so even if you don't trade with the United States, you're still to trade to buy things from China, India, Turkey, and so on. So this is the first thing. So for trading, and the second we said for investments. And again, we need to explain the first thing, why West currencies are getting weaker and why the ruble is getting stronger.
Well, ruble is getting stronger basically because of the sanctions. The Russian government told that all the purchases with the gas and oil and everything like that should be provided in rubles. So
Stop, Leonid. This is very good. So now, when you're trading a different currency is a problem. Why? Leonid, what we said before, with the example of the Swiss franc.
I said that Swiss franc is getting stronger to US dollar.
No. When the slide that we commented before, in which there was a keyword, this one.
I said that the pace of...
No, there was a keyword. Which one?
I don't really remember.
This slide, can you remember it?
Yeah.
What was the keyword?
The liquidity.
So you remember it. So when you trade in a foreign currency, what is the problem? It's gone. Leonid. Okay. We said it, Leonid. Nick, repeat it. We need that currency. We need, and then it could be that we don't have liquidity. We need to buy it. Okay, so
that's what I told about Russian ruble. All the
exactly.
countries are forced to buy Russian ruble to buy anything.
Correct. That's why I said that you got it. So we, thanks to this, Russia has not any more problems regarding liquidity because the countries have to exchange in order to buy gas or oil, have to exchange their currency. So essentially, Europe and Japan and so on have they exchanged their currency into rubles. Correct?
Yeah, that's what I told. And even more,
Yeah, and then you don't have this problem of liquidity. So go ahead.
even more, Russia can't really now buy things from the West and Japan or something like that. That is why Russian businesses don't really need to exchange rubles to dollars. That is why other countries need rubles to make their purchases, but Russia doesn't need to buy dollars in that amount that was before the war.
Yes. And then what happens? Then when there is a negotiation, a deal between Russia and China, they now there is a there is a tendency to use local currency. It's clear what I mean to everyone?
Yes.
So local currency is good for both sides. Why? Because how much money you can print if you are the Bank of Russia? How much rubles you can print? We said as much as you want, and the same for India and so on. So to use local currency is better because then you don't depend on foreign countries. It's clear, please?
Yes.
The problem, what is the problem? That often the local currency are unstable. So that's why there should be a kind of a balance. So there are ideas to do this. So there is this SEO organization. I don't know if you are aware of. Well, anyhow, this is so we explained why the rubles is stronger and why the currency, the other currency are losing compared to the dollar.
Isn't it the trend for a long time?
What, sir?
I think that it's nothing unusual. It was the trend. It has been a trend for a long time, hasn't it? So dollar
Not
is
so much. No, not so much. No, in reality, the reason is different. Is that when you invest in a different currency than yours,
when you trade in this currency a lot.
Yeah, let's say that you are an investor. When you buy another currency,
When I suppose that this currency is more stable than my own national currency, for example.
okay. So the first one is little volatility, and the second,
I needed to buy something for this currency.
we said at the beginning, we mentioned it, Daria, I guess, when we discussed about portfolio allocation optimization.
Okay, we can lower our risk in this case.
So we reduce the risk, and the other one, there are two sides. Every time that we talk about an investment, we have two sides of the same token. So one is risk, and the other one,
Profitability.
what?
Profitability of our investment.
Okay, so that is the thing. If you have a look, and this is, I leave you as an exercise, you need to have a look at the interest rates that the dollar is paying, the euro is paying, and so on and so forth. Okay. Because then you will see that depending on the interest rates that you can earn, then there would be a switch to the investment. So if I earn, I'm a European citizen. No, if I earn 1% with an investment in euro and 5% with an investment in dollars, what should I do? Provided they have the same risk and the FX doesn't change, what happens? What should I do?
You should prefer the currency with the higher rate, obviously.
Okay, I should invest in dollars because then I will get a higher return. Okay, it's clear to everyone. So you have a look at this again as the interest rates then are paid by investing in dollars, euro, GB pounds, and so on. And then you have also the remaining part of the explanation. Okay, so is what I said clear to everyone?
Yes, it is. I've just looked
Yeah.
up, and dollar has approximately 2.5 times higher interest rate than euro, for example.
For example. And what is the problem? Why the euro and the European countries, the BCE, sorry, cannot increase the interest rate?
It is not connected with a risk, is it?
No, it's not connected with risk. What happens when you increase the interest rate? The Kirill. Let's say that you are
The circulation of money gets down.
what?
If you increase interest rate, the circulation of money goes lower.
Yeah, but not. Yeah, this is true, but it's not the main thing. What is the main problem?
You should have less economic activity, maybe.
Correct. Okay. So why? Because to borrow in and to pay higher interest rates, it means that the cost of money is higher, and then if the cost of money is higher, then there would be less investments, less consumptions. Okay, and you can do this to increase the interest rate when you have a boom period. So when the economy is growing, but not when the economy is shrinking. Kirill,
Yes, it is.
Kirill, did you get it?
Yes.
Leonid?
Yes, but basically that's what I said. If you have a lower circulation of money, that basically means poor economy.
No, there are two different things. You can say that they might be connected, but they are different things. One thing is how much the money costs. Another matter is the velocity of the circulation.
I thought that circulation of money connected strongly with the interest rate because what you said, I agree with that. Of course, it's true. And that leads to the lower money circulation.
Yes, but there are two different things. You can say that they are connected, but you cannot say they are the same thing.
Okay.
Like, clear. They are different, but it's true that they are connected. Okay, good. So now let's go back to what we. I have sorry to the presentations that I received. The first one is Bulgakov. Is yeah. So I don't think so. So then next one is Kirill.
Okay. Let me turn on the presentation. Okay, can you see, right?
Yes.
Okay. Sorry. I'm going to discuss not so technical, but as was mentioned in the book, really important topic: education rules and responsibilities. However, it's kind of wide problems to speak about in 10 minutes. So I'm going to focus on inefficiencies that cause, especially in the context of derivatives markets, literacy of market participants. And here is the plan. I will provide some examples related to the subject, and based on the conclusions that I will make, I'll try to think up possible ways to at least partially solve the problem. Also, I'd like to note that I'll be paying the most attention to the situation in Russia, as I am more familiar with it. I think almost everybody knows about Tinkoff Investment. Some of you may also know about other online brokerage systems that provided by other banks. And also, some of you may have seen posts in meme pages in Kontakte. This is the major Russian social network about trading and investments. So I hope you will agree with me that in Russia, in the recent 4 or 5 years, we've been seeing the growing popularity of online trading. It's happened because no matter where you live, no matter how much you earn and how much you know you now can invest in stocks and other financial products. Online trading platforms did truly democratize finance. And what could you see on those meme pages in media and in the past like 2 years? People who had no clue about how the markets operate, who doesn't even know what is supply and what is the demand, invested all their savings. They mortgaged their apartments and flushed down everything they had on gambling. And what about derivatives? Derivatives like futures are especially attractive for gamblers as they allow to earn a lot and don't require to wait too long, in contrast with stocks and bonds. Of course, government couldn't stay aside. A new legislation were created. Now people are divided into two groups, qualified and non-qualified investors. Non-qualified investor can only buy something safe like OFZ bonds or stocks from S&P. Seems pretty good. However, to be honest, non-qualified investor can buy or sell anything she wish. How it works? For example, a person likes to do something with options. The only thing she has to do is to get access to them is to pass an easy test, which contains about four.
Kirill,
Huh?
when you make a presentation, you shouldn't read.
All right. Okay.
So
Okay.
you should know what to talk about and you should present it, not to read.
Okay. I was speaking about what you have to do to get access to derivatives. You have to pass an easy test that contains about four pretty easy theoretical questions. And you will have an unlimited amount of attempts. And this legislation seems to be not very restricting and not very protective. So that my proposition is to strengthen the requirements for person who desires to get access to derivatives, increase the amount of questions, change the content, and maybe it would be useful to introduce some time limits or limits on amounts of attempts. Okay, but how can we be sure that government can protect everyone and everybody via the restrictive legislation? And the answer is no, because I will provide the most recent example. In the last year, many people lost their money after crash of Luna coin, especially who invested in derivatives like futures. In the picture 2, you can see an interesting example. I don't know how these returns were calculated because based on my calculations, you can only earn about 2,000% on these futures. And people invested in futures with substantial leverage, and now government has almost no control on crypto exchanges and crypto markets. And the only possible way to lower the negative effect from scam projects and gambling is to provide a solid background knowledge about finance, trading, and investments. And I'm proud to say that in Russia, the government has already included the elements of financial literacy into social studies in school curriculum. And Also, the leading financial universities like HEC and many others created training centers for social studies teachers, and I hope the situation will get better. And the last example, I decided to finish my presentation with a case of the bank versus Transnet that shows that illiteracy not only harm fellow citizens, but also may slow down the development of the market itself. In 2013, Transneft and Sberbank entered into a deal consisted of two currency fixed barrier options. In 2015, Sberbank notified.
Okay.
Yes.
What is it, FX barrier option?
Again, please.
What is it? What is a FX barrier option?
Okay. So this is how I understand. It's an agreement between Sberbank and Transneft that if, for example, price of the dollar will increase a certain limit that was described in the agreement, then an option will be activated and
in which case, sorry?
yes, and
No. Which case? What you said? Which case will be activated, as you said?
Please, can you please elaborate about?
No, you said that it will be activated. In which case the option is activated?
Option is activated.
You said that. Maybe I misunderstood. Say it again.
Please, maybe you type it in the chat because I don't.
Great. Say it. In which case the option is activated? You said activated, no? This right, please. FX option.
I'm sorry, I can't hear you. Please, could you? All right. FX barrier options is a financial product that this is basically the usual options with which has it's usual options that allows to sell or to buy a certain amount of something like a currency by a price that was described in the agreement, but the only difference, as I know, is that barrier options can be activated, can be conditioned on some events. For example, in this case, in agreement, there were information that, for example, if exchange rate of dollar and ruble will get higher than some level, then this option will be activated, and it will can be activated, and it can be exercised by buyer of this option.
And who sold this option? Who is the buy? Who is the buyer of this call?
Okay. There were two options.
Yes.
What again?
I don't know. We are talking about put or calls. Okay, let's say that we are talking about calls. Who sold the call and who bought it?
Sorry, I can hear you. Can you please type it again in the chat? Okay. As if I am correctly remember, the exchange rate of the pair. Okay.
Did you get the question?
I try. Yes, I'm trying to remember because I know that in 2007 exchange rate has raised, and some of the options was exercised, and
yes,
and
who exercised them?
And I think that it was and Sberbank wanted this situation, so I think Sberbank.
Kirill, I asked you a question. You have to answer my question. Who exercised the option?
Okay, can I continue?
No. Who exercised the option?
You repeated your question, right?
It's over. Let's talk about this. Maybe you can send me a message, okay, email, because the time is over now. But a general comment regarding your presentation. First of all, you need to know what you talk about. Second, remember that when you make a presentation, you shouldn't read. You should summarize what you understood about the topic. You cannot read it. Okay?
All right. Thank you.
Okay. So for the rest, I wish you a nice evening, okay? And then let's meet in 2 days, correct? Hello? Is the class over?
Yes, it should be.
Okay, good. So we meet in 2 days, the 20th.
Excuse me. And as for the second group, this was the lecture for the both groups, right? So we'll meet you in 2 days as well.
Next class, I have seminar again. What you have in the shadow?
Give me a second.
Yes.
For some reason, yes. Yesterday we had a lecture in our schedule, and today we've got a seminar. Yeah, I see.
But is today was a seminar, correct?
Yes, it suddenly appeared that way. Yesterday it was a lecture, and it was at this time. Yes, okay.
What you see in your shadow?
Now we have a seminar at 6:10. At 6:10. Yes.
Okay, and then for the 20th, what you have, lecture or seminar?
We have a seminar.
Okay, so seminar today and seminar the day after tomorrow.
Yes,
correct?
it appears so.
Okay.
Yes, and may I
Yes,
ask you,
of course.
may I present my presentations on Thursday, because I did not expect this sudden change and I have to go, unfortunately.
When you want to present it, sorry?
Not today, but in 2 days, on Thursday, if you
Yeah,
don't
today
mind.
is over. The class is over today.
I'm just in the second group. I misunderstood the schedule a little bit.
It's okay, don't worry.
Yes, okay, so we'll see you on Thursday. Goodbye.
Yeah, we'll see you on Thursday.